Hey, what is going on, my friends, and welcome back to another video on the My Stock Journey channel. Before I get this video started, I just want to take a quick second to apologize for putting so much time in between each video. It's been a super hectic week for me recently. I've just been going work a lot. I have a vacation coming up next week, thank God, and that just means I have to put some extra time in at work this week to kind of cover those hours. I have a fight coming up in a few weeks here. I have my birthday next week, and so just with everything going on recently, it's just been super busy and super packed for my schedule, and it's been really hard to be able to sit down and have the time to make a quality video. I didn't want to put together any half-assed video. I really wanted to make sure that I put some quality together. And so with that being said, I figured it'd be best until I just wait until I have the time and the ability to give you guys the type of content that I've been giving you. With that being said, I did want to make sure that I got in my very last portfolio update as an 18-year-old investor. Like I just said, I do turn 19 next week, and so that kind of calls it a close to my 18-year-old investor series. It'll be 19-year-old investor next, and 18, 19, 20, 21, 22. I'm really excited to just continue it on, and it's just kind of a way for me to log how I did from each age as a 19-year-old, as a 20-year-old, as a 21-year-old, and I want to carry this thing on for God knows how long. And just so with that being said, I wanted to make sure that we sat down, I looked at my portfolio. It's been a super bad week, honestly. Just the market did not do very well at all, and I think it's going to continue to do bad. With that being said, I do have some call options, some put options going, and I did want to go over all of that, and yeah, let's get into it. So here we are on my Robinhood portfolio. As you can see, I am up $1,213, which is about 9.33%, and I honestly cannot complain about it. We have been going down recently, and like I said before, I do believe it's going to continue to go down. I feel like a lot of just bad stuff is happening right now, and it's negatively affecting the market. Until something crazy happens to kind of switch it up, I do believe that this downtrend is going to continue. But what can you do? Try to take advantage of it as much as we can, use it as buying opportunities, and not panic sell. I don't really feel like this is a big deal. Even if it does go down, it gives me more opportunities to create, better profit margins for myself. So honestly, I cannot be mad about it. As you can see, our all-time high for this portfolio so far has been $16,410, which is about $3,397 in profit. Or at one point, I was up 26%. That's cool. I definitely wish and definitely hope that we'll see those numbers again, sometimes in the future here. I don't believe it'll take too long for the market to show signs of recovery again, but I do think that we have to get over this second wave of Corona. It is starting to turn up, it's starting to spread again. And with that being said, I feel like it's going to impact the market in a negative way, obviously. And I feel like we have to rebound and we have to figure out how to handle it before the market's going to show any signs of recovery. So, hopefully that comes soon, but if not, what can you do, right? So with that being said, I am going in on some options. You guys know I do play options every now and then. I don't really do it too often, but when I do, I typically have a good reasoning behind why I feel like it's a good idea. I'm pretty accurate. I would say my success rate is way above 75%. I feel like I only go on stuff if I'm really confident in it. But at the same time, we're all not perfect. No one's perfect, and I make mistakes. Trust me, I've made my mistakes. And so with that being said, let's get into it. I'll kind of show you guys what options I'm gone into. This is not advice to go into these options yourself. This is nowhere near financial advice. Kind of just me saying what I'm gonna do. And so yeah, let's get started. So we are doing some put options on Ford. The reason I gotta go on Ford is because I feel like for the price compared to the profits, that it's super worth it. Ford typically does what the market's doing right now, at least. If the market's going up, it goes up. If the market's going down, it goes down, and it typically follows what the market's doing. And so I feel like with good profits, with low costs, and pretty much following the market, it's a good stock for me personally to do options on. I think next week's going to be another negative week for the stock market. I feel like the numbers are just spiking really high right now. And so with that being said, I feel like it's going to show again next week. I could be wrong. It could go up and I could lose money, but hey, it is what it is. It is what it is. It is what it is. So with that being said, I do have a couple different options here. This is my equity, and this is pretty much how much I have in each one of these. $7 in one, 3 contracts of another for $42, $76, and $75. So we're just gonna see how those go. I'm definitely gonna update you guys next week on what's going on. I do not plan on holding these until expiry. I do plan on selling each and every one before they expire. So, yeah, let's hope we make some profits off of that. Kind of hope Ford goes down a little bit in my heart, but never want to wish negative on anyone else. So what can you do, right? So next up, we have some Coca-Cola calls. As you can see, these are super duper far out. I believe that, honestly, I feel like by December, the market is going to have shown a lot of recovery. And so with that being said, I feel like I wanted to take advantage of that with some call options that are super far out. The theta is not too bad on them. It's not going to eat them alive. and just, reasonable strike prices. Like with Coca-Cola right now, it is at $43.65, which is a pretty significant drop today. It was at 45 yesterday. But I feel like if you take a look at just the recovery it showed at one point, it was all the way up to almost to $50. And I feel like it's not unreasonable to believe that we'll see numbers like that again sometime this year. So with that being said, I feel like these call options are definitely going to be worth it. The data's not too bad on them. It's not going to eat them up as we get closer to the expiry. And even if not, look how much time. One's January 15th, 2021. The other one is June 18th, 2021. So I definitely feel like it's very realistic and possible to be profitable on these sometime within the next year or so. With that being said, let us go ahead and go straight into the stock portfolio. The put options only cover about $400 worth of the value of my portfolio. And so with that being said, the majority of my money does come from my stocks. And so let's jump right into it. So first off, my biggest holding, nothing's changed. Still my biggest holding, that's Store Capital, sitting at 200 shares each. Store Capital's been getting hit, it's definitely been getting hit, but I feel like it could be worse, and I feel like it will be worse. But, we're not going to talk about that right now. It had an all-time high so far in the last couple months of $26.58. It since then has come down about $3 down to $23.65. I'm still up $1,125 because I do hold 200 shares at an average cost of $18. So I definitely cannot complain. I do plan on hitting the 500 share mark on this stock by the end of the year. I'm very confident. I'm very bullish in it, especially in the long run. I feel like it's going to do well. I feel like that uptrend will continue when the market recovers. And so with that being said, I plan on continuing to make this one of the biggest investments in my portfolio, and nothing's changing on that at all. Next up, we have Main Street Capital. Perfect. Look at that number, $3,000 on the dot. It must be at $30. Yes. I have 100 shares of Main Street Capital at $30 each. It's also been another one that's taken a pretty significant hit, but nothing horrible. Yeah, it's lost about $5.80, but I feel like it could be worse. Once again, it will be worse, but at the moment it's doing okay. It's shown pretty good signs of recovery. I mean, you can see here that Main Street Capital has grown pretty slow recently, but at the same time, the recovery it's made off the bottom that we hit gives me a lot of promise. I feel like there's still a lot of room to grow in Main Street Capital, especially with the dividend that they do pay. That is exciting for me. It's a monthly dividend. I get paid $20.50 each and every month. And so that gives me another form of, stability and, confidence in my stocks, right? I'm currently sitting at a total return of $228 because I own 100 shares at an average cost of $27.71. And so, today I lost about $130, but it's no big deal, honestly. I just see that as a buying opportunity approaching. And so if it does see about $27 roughly again, I'm definitely going to probably buy somewhere around another 100 shares or so. Next up, we have AT&T, which is actually the first stock, if I'm correct. Yeah, it's the first stock in my portfolio so far that is producing negative returns overall. I have a super big holding in it of almost $1,450. But I believe in it. I believe in AT&T. I think everyone knows of AT&T. I feel like a lot is happening right now with 5G, new iPhones and everything that will eventually lead to AT&T being, receiving and reaping the benefits of a lot of these technological changes and evolutions. And so with that being said, I did want to make sure I invest now while it's at a good price. Especially if you look here, it's been super volatile, but in comparison to the beginning of the year, it's still at a pretty good discount, and the dividend yield is still there. It's in a 7% right now, which I wouldn't be surprised if they do lower it a bit if we do get hit by a second wave of Corona, but I'm hoping that they don't. But if they do, definitely I hope they don't cut it. But what can you do? We're in it for the long run, and I do believe in them in the long run. So with that being said, I'm at a total loss of negative $14, which we just broke that negative barrier. I only own 50 shares at an average cost of $29.43. It's at $29.15, and that's why I'm at that loss of negative $14. Next up, I actually bought a lot of these shares in Triple N, National Retail Properties. This is one that I have a lot of faith in, especially in like the midterm, roughly. I don't think it's going to be a stock that I own very, very long term, but definitely in the midterm, the next year or two, I'm definitely going to hold on to them, especially if there's another outbreak of the whole virus and everything. That this is going to be a stock that profits when the market and the economy, society, everything just fully is back, however long that may be. This is definitely a stock that I believe is going to see major returns. With that being said, I'm currently sitting at a market value of $1,331, which is a total return of $104 because I do own 38.55 shares at $31.84 average cost. Since the price is at $34.54, it's producing me a return of a little bit over $100 Like I said, the dividend yield 5.67. That's going to be another solid one there. They are still continuing to pay their dividends, which is nice every quarter. And yeah, Triple N is definitely a stock that in the midterm I want to make a really big part of my portfolio. A year or two, whenever everything's back normal, I do think I'd probably sell, take my profits and put them in other places. But for the time being, this is definitely a stock I'm going to hold on to for a good while. Next up, my boy, a stock that's actually slowly turning into one of my absolute favorite stocks is Coca-Cola. As you saw earlier, I had calls on Coca-Cola. I'm very bullish on them. I feel like Coca-Cola is just it's easily one of the most established companies, businesses that there is. Everyone knows Coca-Cola. I don't know how many countries there are in the world without Coca-Cola, but I feel like the majority of countries have it. And so with that being said, I don't see them going anywhere anytime soon. I can't imagine the world without soft drinks, and the majority of soft drinks are owned by Coca-Cola. So with that being said, Coca-Cola pays me currently a dividend of $11.89. I have $1,265 worth of market value in them. I am down a little bit in them. I'm down $61.88 because I own 29 shares at $45.78. Since the current price is $43.65, obviously I am going to be down a little bit, but nothing super significant. I don't own that many shares. So with that being said, I'm not seeing horrible returns. I definitely do plan on dollar cost averaging my way down very, very soon here. Especially if we hit that 40 range, I'm going to buy a lot more shares than I have now. I might double my shares, maybe go 60, 70. But we'll definitely just have to see what the market does and how it all plays out. And yeah, so that's Coca-Cola, $1,265. Next up, we have Aflac, another company that I have increased my holdings on since the last video. I'm sitting at 20 shares of Aflac. That's only produced me a $6.77 return. The market value of my holdings in them is only $693 because I only own 20 shares at $34.34. Aflac's one of those companies that I see doing very well eventually. I feel like right now they're going to keep getting hit pretty hard. I don't see the recovery coming very fast like some of those other stocks, but I do believe that gives me more time to slowly add money into them. I don't feel rushed at all because yeah, they're going to grow and they're going to recover a bit, but I don't think it's, like I said, I don't think it's going to be within a day or two that it shoots $10, $20 a piece. And so with that being said, I'm just taking my time. That's why it's a little bit smaller of a holding in my portfolio, simply because I want to just take my time and slowly add that money in, dollar cost average up or down, whichever way. Honestly, my average cost doesn't really matter to me at the moment, just because I feel like profits are going to come no matter what I'm at the moment. Everything's so low. And yeah, so Aflac, $693.60. Next up, we have Microsoft, the boy. I have not bought any more Microsoft shares. I was actually going to really soon. I planned on doing it at the beginning of the week, but when everything started dropping, I kind of got nervous about buying now. I felt like better buying opportunities are going to come, and I feel like that was kind of it's kind of well represented. Like when the week first started, as you can see here, that it did start going up, and then I was like, nah, the stock itself is going up, but the market's starting to get nervous, and so I feel like that's going to be represented with Microsoft really soon. And as we can see here, it did start to slowly fall, and so that being said, I feel like it's going to continue to fall like the rest of the market will, and I find that a better buying price will come eventually, not right now. And I feel like Microsoft is just a stock that is going to be around forever, and so I'm once again not super rushed on them. And yeah, so I have $588 worth of market value in them at a total return of $68 because I have 3 shares at $173. The stock price of Microsoft has gone up to $196, so that's produced me about $20 and $24, roughly $22 each. So that gives me a profit of $68. Next up, I have Waste Management. Waste Management's actually been doing not bad, honestly. They've been doing pretty good. During this whole thing, obviously they are gonna follow the trend of the market, even though I feel like they kind of divert away from what's going on in the economy. I feel like there's always going to be waste, especially with people at home. People are producing more waste, but at the same time, earnings and revenue are still going to be affected all around the board. And so with that being said, Waste Management is being hit a little. I only have 2 shares of them at $98.68 a piece. My market value is $206 because each one of those has only gone up about $4 roughly. And so that's produced me a total return of $8.30. And yeah, Waste Management is another one I've talked about in the past that I'm just going to take my time on. They're going to continue to go up, and I don't feel the need to rush them at all. Atmos Energy is in the same predicament as Waste Management, in my opinion. Pretty much the same reasonings is why I only have 2 shares of them is the same for Waste Management. I have 2 shares at $100.22 average cost. The market value of my portfolio is at $194, which means I am down about $5.51. not too mad about it. Like, I feel like it's given that the market's going to go up, it's going to go down. So whenever I see these negative numbers, it's not a big deal. But I am going to just keep slowly buying one share here, one share there over the next couple of years, and definitely just reap the benefits of that slow growth. Last but not least, I have Stag Industrial. This is over on my M1 Finance account. And as you can see, Stag is still doing okay. My average share price is $21.50. Stag Industrial is currently sitting at $28.13, so they are still well above my average cost. It's produced me a return of about $440. That is for sure gonna come down a bit, but until then, I'm still excited about it. You know, Stag pays me about $7.70 every single month, and so with that being said, I'm just gonna keep reinvesting those dividends, getting more and more shares, and letting it grow over time. I don't plan on buying much more Stag Industrial. I don't want to overdo it. I don't want to overkill it with the REITs. I definitely want to make sure I'm not focused in on one sector too much. So with that being said, I'm just gonna let Stag grow itself for the next couple years or whatever. And yeah, so Stag Industrial, I'm currently sitting at a total of $1,795 in there. And once again, that is the total value of my M1 Finance account, because I have sold all of my other stocks that are on M1 Finance. So that will be it. That is my entire portfolio right now. It's sitting around somewhere around $16,000. I haven't done the exact math. I don't know why I always wait until after the video to do the exact math, but you know, typical Tyler stuff right here. So if you guys did enjoy this video, definitely let me know by hitting the like. It lets me reach new audiences and it grows my channel so much. We're 4 subscribers away from 200 subscribers, and it would be amazing to hit 200 for my 19th birthday. My birthday's on Wednesday, and so hopefully by then we can have 200 subscribers. Portfolio still maybe over in the 15,000s. I'm about 1,000, 1,500, 1,700, something like that in profit. So I definitely cannot complain. This has been an amazing year. Even though with all this going on, I feel like I've grown so much as, you know, as a YouTuber, as an investor, as a person, as a fighter, as a boyfriend, as a brother. I feel like using these opportunities of negative times to really focus on yourself and self-grow is super duper important. And it wouldn't, you know, I couldn't do that without the help of you guys, especially as an investor, especially as a YouTuber. You guys have helped me out so much, giving me tips, giving me advice, feedback. Continue to give me feedback down in the comment section. I always reply there. And if you are new to the channel, hit that subscribe button and maybe you could be the 200 subscriber. I'll see you guys next time.